Conversations with Kim, an event series we do 9 times a year, and we felt that it would be a lot of fun to do in late November, early December, a Cocktails with Kim. And so we do appreciate you guys coming and taking advantage of our Cocktails for a Cause. Half of your drink prices are going to benefit our Bloomington Future Leaders program. We give scholarships away, and we do some great things, and I know Nate's pretty excited to hear that as well. So I'm Kim Hansen. I'm the president with the Bloomington Chamber of Commerce, and I want to first of all thank Larkin Hoffman for sponsoring us here tonight. That's wonderful. And when I was reaching out for panelists, I was on the Bloomington Community Foundation website, and I found Mike Smith here at Larkin, and it seemed like a really natural fit. So you're going to hear from Mike in a little bit, and then also Katina here is from the Council on Foundations, and you'll hear from her. I'd like to introduce some of our board members that are here tonight. We've got Rod Axtell, our treasurer. We have Andrea Specht from Artistry, Tim Bussey, our city councilman. We have Jill Massels from The Works. And have I missed anyone that snuck in? Thank you again. Oh, and Michelle, that's right. She's stepping off of our executive committee, and I don't mean to discount you already, but yes, Michelle Swanson from Excel Energy, a fantastic partner of ours. And then we have an elected official in the room, also Tim Bussey, our councilman here in Bloomington at large. Thank you again. We've got a few board members from the Bloomington Community Foundation. If you guys want to stand, we really appreciate you all being here. I know Gil is here, Linda's here. There she is. John. Come on over, John Stanley's here. Thank you guys for being part of this. So at this time, I'd like to introduce my coworker, Sherry Gengler. She is the Director of Foundations at the Minneapolis Regional Chamber, and she's going to talk to you tonight about the Keystone Program. Some of you may be familiar with Keystone. We've got a big event coming up in December, and I'd like her to tell us a little bit about this because we happen to have this conversation about giving on Giving Tuesday. I'd like to say that Ann and I had the foresight to plan it that way, but I cannot tell a lie. It just was coincidence, and we're so thrilled. We're so thrilled to have this opportunity to talk about giving, do some giving, and talk about our Keystone Giving program. So here you go, Sherry.
I totally think you should have claimed that you knew exactly what you were doing when you did that.
I can't do it. I'm like Jim Carrey in that movie.
Hello, good afternoon, good evening. My name is Sherry Gengler, and I am the Director of the Chamber Foundation. And as Kim mentioned, we have a fantastic program. Many of you may have heard of it. It is a program that has been around for over 40 years. It started in 1976 with some very foresighted business leaders who said, you know, we want to make a difference in our community, and we are going to give back to those who make our community great. So they started the 5% Club, where they donated 5% of their pre-tax earnings back to organizations in the community making a difference. It has now grown. There's close to 200 companies that are members of all sizes. They give 2 or 5% of their pre-tax earnings back to charitable organizations. And so a lot of the organizations here in the room are members of Minnesota Keystone. We do have a great event coming up December 13th at the Hyatt Regency Minneapolis, and that event is when we get together and we celebrate those companies that are doing great. So all of our Keystone members will be in the room. We will honor 3 Keystone members. This year our honored companies are Niemer Fieger, Highland Bank, and Walzer Automotive. So great companies doing great things. I hope you all can come and join us. Registration is still open. If you have questions about the Keystone program, about what your company might do to become a Keystone member, it's absolutely free. There is no cost to be part of it. You do not have to be a member of the chamber. You just have to have a business in Minnesota. So we actually have Minnesota Keystone members from Rochester and Duluth and all parts of the state. So if you have any questions, I'd be happy to talk to you about that afterwards. Thank you.
Thank you, Sherry. So it is Giving Tuesday, and I want to take a minute to recognize all of the local nonprofits that have joined us here tonight. I think we're going to have a great conversation about the Bloomington Community Foundation as well as foundations throughout the region. If all of you from a nonprofit could stand, I'd like to recognize each of your organizations, and I need to see you in order to do that. So, thank you so much. We have Joni from Ron's Gift. We have Andrea Specht from Artistry. We have Jill Mazels from The Works. I have Alex, and she is from Angelica Cantanti Chorus. Great. Hi, Courtney from Cornerstone. We didn't have a chance to talk earlier, but hello. Hi, Maggie. Thank you so much for coming from Bridging. Thank you, Allison from Pinky Swear. Patty from Veep, and she has a fun announcement if anybody would like to talk with her after the event. Yes. Thank you so much for coming, Josh. And I know this guy, Nate Rollick from the Bloomington Heritage Days. Have I missed anyone? This is an opportunity if all of you would like to connect with these individuals after this meeting. And of course, we have Gil from the Bloomington Community Foundation. Thank you so much, Gil. If you want to talk with them about giving opportunities, this would be your crew to connect with. So at this point, we'll go ahead and get started with the event. Yes. Thank you guys all for being here. So we have Mike Smith from Larkin Hoffman. He is also a board member with the Bloomington Community Foundation. Mike specializes in the areas of estate planning, business and succession planning, benefits and compensation, estate and trust administration, taxation, which you're going to hear about. Pay attention. The taxes are changing. Taxation rules are changing. It's going to affect how you donate. And professional practices and closely held businesses. He came to us via a college, a small college in North Dakota, and then he has his law degree from the University of Minnesota. So thank you so much for joining us, Mike.
Thank you, my pleasure.
And Katina Mortensen is joining us from the Council on Foundations. And Katina oversees the foundation's collaborative philanthropy strategy and serves as the staff lead to the foundation's working groups, some of their peer networks and collaborations. Katina joined their public safety policy team in 2017, serves as the program lead for the foundation's corporate giving program, and she started there in 2015 via Grassroots Solutions, an organization that I'm familiar with. And she was an engagement strategy firm in Minneapolis. And so that is an opportunity where she worked with a number of local and national foundations, partnering with them on community engagement efforts, grant-making initiatives, project planning, policy change efforts, training, facilitation, assessment, and evaluation. Sounds like this is a person that some of you foundations in the room are going to want to get to know. She's got a lot of knowledge. And she received her Master's of Public Policy from the Humphrey Institute on Public Affairs at the University of Minnesota. So welcome, Katina.
Thank you.
All right, so you know how this goes. Many of you have been here before. We're going to have a conversation. I'm going to ask some questions. We're going to converse about this topic. We're going to open it up to some Q&A, and then we hope that you'll continue the conversation well into the evening if you choose. So first of all, Mike, tell us about the Bloomington Community Foundation's main focus.
So the Bloomington Community Foundation's main focus, probably not going to come as a big surprise to you, is the city of Bloomington. Our focus is making Bloomington a better place, whether that's for living, whether that's for going to school, whether that's for working. So our focus is really the city of Bloomington and improving the quality of life here in Bloomington. So we partner with a lot of Bloomington organizations, a lot of you that are here, and we tend to, when we give money, engage with those organizations. We bring them into our board meetings. We talk with those organizations. We ask them about their budgets. We ask them about what they're doing for Bloomington, how their organizations, many of the organizations span the Twin Cities area. What our board likes to get into is, well, what do you do in Bloomington? So when people ask why should we give to the Bloomington Community Foundation, I think there are a lot of reasons, but I think one of the big reasons is we kind of have the pulse of Bloomington. We know the organizations, and we know where the money is needed. and we make sure that it gets to the right organizations. I think I would be remiss without mentioning that we don't have any paid staff.
That is correct.
Gil, who's the chair and president of the organization, his office does a lot of mailers for us.
Thank you.
And a lot of the money, or all the money really, that comes into our organization, we don't do programs, but we make sure we know the programs in Bloomington, and your charitable contributions really run through our organizations to those charities that are doing good things for Bloomington.
Thank you so much, Mike. That makes a lot of sense. And if you could share a few stories of how gifts from the foundation have benefited and impacted, area foundations, or area nonprofits right here in the room, maybe?
Sure. Well, over the years, we've given money to, the big organizations in Bloomington. We've got Artistry here, we've got Veep here, we've got Bridging here. So we've worked with those organizations and helped support those organizations. I think some of the more interesting stories involve some of the partnerships that we've had with the schools, with Artistry. A couple that come to mind, we got a gift from a family whose homestead was part of the the Richardson Nature Center. And they gave us some money, and they said that was where we grew up. And their homestead became part of that park. So we partnered with really Richardson Nature Center to support some kids making field trips and getting to see the owl and some of the other things that they have there. That was a fun thing. We got a gift a couple of years back from 2 retired school teachers. I'm not sure if it's politically correct to say spinsters, but they were sisters who were never married. Their lifetime was spent teaching in the Bloomington schools.
And there was
they
no
retired.
arsenic involved? There was no arsenic involved?
There was not.
Correct? Okay.
When they retired, they no longer lived in Bloomington, but they gave us some money and said, we want to support something to do with Bloomington schools. And at that point, we talked to Les Fujitaki with the schools, and we again partnered with them, and we financed a program called, Gil, you're going to have to help me with the name, Make Tracks to Kindergarten, where we identified some at-risk students who may not have had the tools or the family support, may not have even known how to identify letters. And it was kind of a little bit of a summer school program entering into kindergarten. And that was a neat program. One of the things that we've done recently is we've partnered with Andrea and Artistry and the schools. There's a program now, I think the Mary Poppins play was a neat example of the director of the play would go to the schools and kind of get the kids excited about the play. And through Artistry, we provided some of the funding to allow those kids to take a field trip then to see the play. So what a neat partnership between the school district, between Artistry, between our organization. We recently had someone from the school district come to our board meeting, and they talked a little bit about the idea of helping with self-esteem and how sometimes if you're a gifted athlete, you get to go on trips. You get to go on field trips with the team. And, with Artistry, you don't have to have those athletic skills, and you can still go on a field trip to see Mary Poppins. And, if you remember how excited you were in school to get that day off and go on a field trip and how special it made you feel, that just raises the self-esteem of these kids. And that translates into, how well they do in school, how well they do, out of school. And we just think those are some of the neat programs that we'd like to support.
Oh, well, thank you. Those are good stories. And I will be getting Katina into our conversation. I want to focus still a little bit locally here in the Bloomington area, and then we're going to have her add some things. But talk about donor levels compared in the last few years. I think you and I had a chance to talk about this a few minutes ago, and they've remained relatively flat. Can you talk about that briefly?
Flat or consistent. You know,
Yep.
I don't know that Gil and I went back and looked at the gifts we've received at the Bloomington Community Foundation, the grants that we've made, and really over the past years, they've stayed pretty consistent. So I'm not sure that we've seen a big uptick, a big drop-off. Sometimes it depends who we give our Bloomington Legacy Award and how many friends they have that show up at our event every year. That influences the amounts. But it's been fairly consistent over the last 10 years.
And just briefly, does that resonate with the regional trends in terms of foundation giving?
I would say so. I think one concern that we have now with the new tax law is, and you mentioned this, that the incentive for individual giving is a little bit diminished with just the change in standard deduction and all of that. So we have some concerns that there might be some reduction in giving from individuals as a result, but overall, to date, it's been pretty stable. I think in Minnesota, foundation giving is about $1.6 billion annually.
Wow.
And individual giving is actually quite a bit more than that. I think I'm going to butcher the numbers a little bit, but I think about $5 billion total giving, and so the rest of that is individuals.
I had heard, and I want to get to this question with Mike on the taxation issue. I had heard a statistic quite a few years ago, and I think because of the philanthropic nature of our corporations throughout the Twin Cities, throughout the state, we have more nonprofits per capita than any other regional area of our size. And that's because we give so much, which is really exciting. When you look at the nonprofit organizations that are here in this room, we have so many of them because we are such a generous corporate philanthropy, corporate culture, as well as individuals. So, Mike, I do want to segue then into the taxation changes. And you and I had a conversation about this and how this is going to change the face of giving, perhaps. And how does this tie into some of the donor-advised fund organizations? And if you could talk to us about that, please.
Yeah, I think that some of the trends that you're going to see is more utilization of donor-advised funds. So whether that's
and can you talk about what that is?
Yep. So whether that's a community foundation, whether that's a regional foundation, whether that's an organization like the Fidelity Charitable Fund, which has become one of the biggest charities in the world because of this. So a donor-advised fund, you get a charitable deduction when you make your contribution to the organization. But you have basically a handshake agreement. It cannot be a legal agreement that they will follow through and make gifts to the charities that you direct them to. But believe me, if you're any kind of a charitable organization that advertises that you have donor-advised funds, if you double-cross your donors and don't follow their wishes, you're not going to be getting a lot of contributions into your donor-advised fund. So think of it as a way of parking your charitable dollars and getting that charitable deduction up front. And then you work with that organization, or effectively you tell that organization where you want your funds to be contributed to. So the Bloomington Community Foundation, we do not operate programs. We are really a pass-through organization. The tax change is driving more and more people to think about donor-advised funds.
And why is that exactly? If you guys can talk about that.
The term that you're going to hear used is bunching your donations.
Bunching.
So the comment on the standard deduction. So the recent Federal Tax Act limits itemized deductions and increases the standard deduction. So if your itemized deductions fall below the standard deduction, you may not get a benefit from those charitable contributions up to where that standard deduction is at, because you can always just take the standard deduction. But if you use a donor-advised fund to bunch maybe 3 years of your charitable giving into 1 year, that will push those itemized deductions up above the standard deduction, so you'll get that tax deduction, that benefit, in the year that you make the gift. And then for the next 2 or 3 years, you do your your typical giving out of your donor advised funds to those same charities, same timing, so it allows you to effectively get a tax deduction up front and then make those gifts throughout a period of 2 or 3 years so that you get the benefit of the tax deduction. So that was very popular, and it's something that people are talking about, bunching your deductions. And with the donor advised funds, it's a lot easier to bunch those deductions and then follow through with the giving over the next few years. The other benefit, and I think the reason that some people like to use donor advised fund is some, because it's a pass-through, you can remain anonymous. I think everybody knows that when you give money to an organization, that means the next quarter you're going to get a letter, you're going to get a phone call. Some people want to make those gifts and maybe not get bothered with all of those letters and phone calls. So with a donor advised fund, you can choose to remain anonymous to the extent that you want to remain anonymous, or the donor advised organization can also make sure that the charity knows that this is coming from the Mike Smith Foundation. So you can remain anonymous if you would like, but you don't have to. So I think the big trend that we're seeing in charitable giving is donor advised funds. And whether that's through a relatively small community organization, community fund like the Bloomington Community Foundation, whether it's a larger regional organization, the Minneapolis Foundation has been around forever, or we are seeing, I mentioned Fidelity. The Fidelity Charitable Fund, I think, is becoming one of the biggest charities in the world. And if you know exactly who you want your gifts to go to, and you don't want the additional partnership and guidance, that's another option for people these days.
Yeah, Katina, please add to that.
Yeah, one thing I'll add, and I definitely think the trend of bunching is very much here. I think previously with the prior tax law, there were about 30% of people that itemized, meaning about 30% of people were receiving the charitable deduction if they were donating. And I think the estimates are it'll be about 10% itemizing with the new tax law. So that means a lot of people who previously received the charitable deduction will not be eligible unless they bunch their donations, which obviously takes a little more planning and forethought. One thing we are lucky to have here in Minnesota that we were actually the first state to have this is we do have a non-itemizer charitable deduction at the state level in Minnesota, which is very unique. I think there are only a handful of other states that have it, and we were the first state to have that. So one thing that we've been working on in a lot of kind of national nonprofit and philanthropic serving organizations have been thinking about how do we advocate for a non-itemizer deduction at the federal level to kind of fix the charitable giving issue that this tax law created.
So am I hearing this right? And talk to us honestly. Are we concerned that giving might change, might go down, might fluctuate because of the tax changes, the tax law changes?
I would say yes. And I think it depends on which area you're in and what your donors are like. So I don't think it'll be consistent across the sector. But I've seen some studies that suggest between like 12 and 20 billion decrease in giving nationally, which I think is about 4 or 5%. So it's an estimate, and I think we won't really know until a couple years into the new tax law.
We've also seen some changes with the estate tax. Before the tax change at the end of 2017, the federal exemption, the amount that you can leave to your children was $5.6 million per person, and that got doubled. So when you look at an estate tax on the federal side, that's 40%. There used to be a strong incentive. You add in the Minnesota estate tax, and you're talking roughly half. That once you run out of exemptions, half of your net worth beyond those exemptions would go to Uncle Sam and only 50% to your kids. So I kind of look at it two ways. Certainly there was an incentive to say, instead of my kids getting 50 cents on a dollar, I'll leave it to a charity and get 100% going to the charity. I like to look at it a little bit differently and saying, look, without estate taxes, your kids are getting more money. So you have the opportunity to be more charitable. And lucky for us, we're still here in Minnesota, and the estate tax exemptions are only in the $2.5 to $3 million. So we still have a little bit of a tax advantage here in Minnesota to encourage planned giving or giving at the time of passing. I do want to mention one thing, because this is consistent regardless of the tax law changes, regardless of if you have a small estate or a large estate. Still think about the idea that you've got maybe a retirement account, an IRA, that when you leave that to your kids, they're going to pay taxes. You leave that to a charity, there is no taxes. So the example that I like to use is, if you've got $1 million in your IRA and $1 million in your bank account, and you ask your children which would they prefer, well, they should prefer that bank account because they don't have to pay taxes. But you ask your favorite charity what they would like to get, they don't care. They don't pay taxes. They'll take your IRA. Working in estate taxes, it's also nice to be able to set up a client's will to benefit their family, and then they can do the charitable giving through the beneficiary designation in your IRA. It's efficient tax-wise. It also means they don't have to come back and pay me to update their will when they want to change their charitable mix. So they change churches, or they decide to switch up the percentages that are going to their charities. It's easy to make that change in their beneficiary designation. They don't have to come back to me and redo the whole estate plan. So that is, again, from the small clients to the large clients, the first thing that you focus on is how is it efficient from a tax perspective, and looking to those retirement funds. It also is a benefit. You know, those retirement funds are there for you to use in your retirement, but if there's anything left over, think of a charity.
That's great advice. Thank you. Early in the year, the state legislature is going to have to look at adopting how much they're going to adopt, correct, from the federal taxation?
Right.
And so is any of that looking like it might change what you just talked about?
Not really. I'm
Okay.
going to have to defer to Mr. Wilcox and Ms. Haller here on how they're going to get the Minnesota taxes done this year. I work with a lot of accountants and tax preparers, and I'm not sure they're even up to speed on how the federal conformity or lack thereof here in Minnesota.
Right.
At one point, I heard that TurboTax might not even support Minnesota tax returns. So we all might be going to a tax preparer to help
that's
us with
good.
our
Well, yeah, pass your
Minnesota
cards out.
returns this year.
Yes. Yes.
Minnesota did not conform, and so what's going to happen for 2018 anyway is that we will literally be preparing 3 returns. We'll prepare your federal based on the itemized or not itemizing, but Minnesota, we will still itemize.
Oh, okay, good.
And so we'll have to go back and prepare a federal return based on 2017 tax law in order to prepare your Minnesota tax return.
Wow.
And there may
Stay
be
tuned, everybody.
there may be something that the legislature could do very quickly. I'm not sure that there's an appetite before the forms are due out here in January, February. So it's going to be an interesting tax filing season
I
this
know
year.
Sue
I
for-
don't think
yeah.
it affects the broad discussion on
Okay.
bunching or do your charitable giving from your IRA. There are other rules that allow you to make gifts once you're 70 and a half up to $100,000 of direct contributions from your IRA without worrying about limitations on deductions. So all of those things are still in play.
Okay. And I know Sue from Midland had a quick comment.
So you're talking about individual giving. What's going on with corporate giving? Some of the changes, some of the economic things that I'm a small business owner, and I give my staff money to donate. So I'm just kind of curious where the corporate giving is going.
Yeah, and we're going to get to that question in just a moment. Thank you. You read my mind. That's great. And Linda has one more thing.
I just want to say, one of the things that I'm recommending to our clients is your R&Ds. If a client is at the point where they're taking required minimum distributions, if we're going to end
Wow, I think that both Rod and Linda will be at a table here after the conversation. If you guys want to definitely get some more information about that, thank you so much.
And I think, Linda, what Linda's saying is that this special rule that allows you to direct money directly from your retirement account to a charity, once you're 70 and a half and the first $100,000, whether you itemize or not, that does not become income. You know, you don't get the deduction, but you don't need it because it's kind of an automatic deduction against that income. You do need to make sure that the dollars go directly from your IRA to the charity. So you got it. There's some logistics there.
Okay.
But as long as you're 70 and a half and up to 100,000 of giving, you can avoid that problem with the standard deduction by having those gifts go directly to the charities. And I think, as Linda mentioned, it's the same age that when you turn 70 and a half. Why they chose 70 and a half, by the way, I have no idea. But once you reach that age, you're eligible, once you have to make the required minimum distributions, to direct those to a charity.
Okay, thank you so much. Another person who will be holding court after our discussion tonight, Mike, definitely. Katina, share what you're seeing and hearing in the corporate giving circles, and talk about, how companies here in the South Metro are fitting into the trends you're seeing throughout the state or throughout the entire region.
Great, thank you. Well, first of all, I'll just concur with what you said earlier, that when you look at giving in Minnesota, we do have a lot of corporate giving. Of kind of that $1.6 billion that comes from foundations and corporate giving programs, nearly half is from corporations. So we're really fortunate to have so many large and small corporations in Minnesota that are really generous. In terms of some trends, I think definitely this year with the tax reform, we have been having more conversations with our corporate members about, corporations generally were the kind of the winners from tax reform. They benefited substantially with the change in tax rates. And, we've been talking with our members about, what does that mean in terms of what your company may be doing in terms of giving. And I know that in seeing some early articles, and I think more will come out as a couple years pass, most of the savings in taxes is not going to philanthropy. I know you've probably all seen that. A lot of it's going to stock buybacks and things like that. But there is a portion that's been going to kind of philanthropy. And so we do have some members that, increase their giving to their corporate foundation, or TCF Bank, I know, for example, used to have a 1-to-1 employee matching campaign, and now this year did 2-to-1 matches, in part because of this concern about individual giving and the potential drop, and wanted to kind of incentivize individual giving by encouraging and doing larger matches. So I wouldn't say that the majority, or even close to a large percentage of the dollars that have been given back to corporations or kind of saved by corporations from tax reform is going to community, but some is, and I think it's something for companies to really think about, because there is suddenly this influx of cash that isn't going to be going to Uncle Sam, that can be thought about how to allocate that, and if there's maybe a piece that goes to philanthropy or to encourage employee giving. So we've seen some of that in terms of trends. I think other trends that are a little bit more broad but relate to philanthropy and corporations is the trend towards corporate social responsibility. So I think in the past, corporate foundations were a little more separate from the companies, and there's been kind of a bringing together, I guess, and thinking about a company being obviously a driver of profit and financial value, but also social value. And how does a company fit into that? And it's not just the giving that they do, but it's often where they're sourcing their materials, how they're treating their employees, how kind of environmentally friendly they're being in their operations. And so we're seeing more companies and more corporate foundations kind of fitting into this broader corporate social responsibility lens.
Yeah, I'm seeing that as well. I want to, kind of the elephant in the room, there's several of them. United Way.
Yes, that was the other trend I wanted to mention.
Okay, yeah. Can you talk about, they had quite and continue to have a great relationship with our corporate community. Talk about how that is evolving.
Yes. So yeah, that's another trend in terms of, as I meet with various members of ours that are working in corporations, there's definitely a trend towards employee giving campaigns kind of opening up. In the past, I think most of them were specifically directed to United Way, and there'd be large fundraising operations focused on fundraising for United Way at a lot of the major corporations in Minnesota. I think now, corporations still have a great relationship with United Way, but there's been a demand, especially by I think some of the millennials in these companies, to have more choice in where they donate their money. And so, especially with the rise of online giving, it's very easy to go to a nonprofit website and donate directly. The need to have it funneled through United Way, for some, they feel like they would rather just give directly. I see a lot of value in United Way, I think, because they're so big and know so much about what's happening in the community, similar to what you were sharing with the Community Foundation, have a really good sense of where to invest money and where there might be gaps. But I think that there's been this kind of opening of employee giving campaigns to really take into account the interest in giving directly to the foundation or the nonprofits that they care most about, and then companies are often matching to those nonprofits directly as well.
Okay. Good.
So I think it's great that people, I think we're seeing then more participation potentially from employees in those campaigns, but I think it is obviously a challenge for United Way. I know they've had some smaller years in the last couple of years, and so just a change that I think has nothing to do with the quality or anything like that of United Way. I think just more with trends with online giving and people being able to give more directly. It's caused a change.
You mentioned matching giving, and that I think is also a trend. We've seen that at my law firm, Larkin Hoffman. It used to be in the old days that our foundation would make gifts, and it would be a little bit of a struggle or a contest to who would influence where those gifts go. We've moved more to the matching concept, where we match gifts that attorneys and staff make to charitable organizations. We think that's a little bit of a fairer way to identify those charities. If our employees are willing to step up and make that gift, we're willing to match those gifts. It takes some of the politics out of things. The corporate rate went from 36 on the top end down to 21. So there's another 15% there from a C corporation in terms of tax savings. Some of that might go to the owners. Some of that might go to increased salaries to employees. Some of that might go to charities. So it's kind of back to that double-edged sword there. You don't have such a big incentive to save taxes, but because of the tax savings, there's more dollars to go around. And I think that charities need to focus more on that. There's more dollars to go around than you can save taxes by giving to us.
I think one more trend that I'll share. I think typically in the past, a lot of corporations focus their giving in where they're headquartered, which is still the case. But more and more we're seeing larger corporations that maybe have operations in multiple places or even operate in multiple countries are trying to still do their local headquarter giving, but also doing some giving in other places, kind of where they have their footprint. So that's a trend that we've noticed, especially for some of the larger corporations, really trying to kind of spread out their giving across their operations, which obviously provides a lot of great opportunity for employee engagement. I think that often in kind of the non-headquarter communities, typically there aren't foundation or corporate giving staff, and so often then it's kind of an employee giving committee or something like that that helps select where the money might go. So it's maybe democratizing it a little bit to the broader employee base. But it also means changes kind of in some of the headquarter communities as that overall giving that the company's doing might be the same, but where they're giving is expanding. Sometimes it means there's a little bit less in the headquarter community.
Yeah, and that brings up the other elephant in the room, which are the millennial generations, Gen Y and Gen X. If you guys could talk about innovations that companies are using. Obviously, you just mentioned, I think that the democratization and those giving committees are being driven by some of the millennial, workforce. How are companies and foundations, innovating in ways that are incorporating the likes and the wants and the needs of that very vocal, those three vocal generations? Mm-hmm. And I saw some of the nonprofits in the room nodding their head when I mentioned this group, correct?
Mm-hmm. Well, I think that definitely employee engagement is really important, and so you're seeing, opening up of campaigns, matching gifts, volunteer opportunities. You're seeing companies give PTO for volunteering, so that people have kind of designated time that they can spend volunteering. Sometimes that's matched with donations. If you volunteer a certain amount, the company will donate to that cause. So I think in general, there's a trend towards kind of being more open to what your employees are doing for volunteering and giving and supporting that. I think the employee or even community review panels for grant making is becoming a trend. I know, thinking about the South Metro, I know Blue Cross Foundation has done some grant rounds where they've actually had community reviewers involved in not necessarily selecting, but kind of advising on the final slate of applicants. And I know that a number of companies have involved employees in that, whether it's kind of outside of their hometown giving or within their headquarter community as well. So thinking about how to involve employees in that, or even I know some have also had kind of people vote and things like that. So different ways to engage in that area.
Mike, anything that you're sensing? I know you deal with estate planning, which might be on the other end of the generational spectrum, but
Sure. I think in terms of millennials and some of the younger generations, it's really just a question of status quo. And this kind of gets to the issue on United Way. If we're making these gifts, why do we just continue to make these gifts year after year after year? And I think the question is, why aren't we digging in a little deeper and finding out where these gifts go and getting a report back and maybe some new ideas. So I think that idea of questioning the status quo comes from this younger generation and is not necessarily a bad thing. You're not just having the president of the organization decide where these funds go. There's committees, there's people saying why and what are we accomplishing. So all of that is good, especially with some of the smaller organizations who then have an opportunity to say, here's what we're doing and why you should give to us.
yeah. Well, I'd like to open it up to all of you for questions that you have for our panel. Yes, John Olson.
What are your thoughts about charitable remainder trusts? Is there something similar for the corporate side?
Charitable remainder funds, trusts, and if there's something available on the corporate side.
So I'll take this. It gets into some of the intricacies of the tax. So a charitable remainder trust, basically the idea is if you have stock or real estate that if you sold, you would have to pay a big capital gain because of the appreciation in that asset. However, if you gift those assets, so think of year-end giving of appreciated stock. Why do people give stock at the end of the year? Well, if I've got a stock that I bought at 30, it has increased in value to 100, I can sell it. I can pay taxes on a 70 capital gain and then give the rest to charity. But I can also give that $100 worth of stock to a charity and get a charitable deduction for $100 without recognizing that capital gain. So that's why a lot of people at the end of the year give appreciated assets, typically it's stock, to charities. They avoid paying the tax on the capital gain, and they get the fair market value deduction for the 100% value of the stock. So it's just efficient from a tax mechanism. Carry that forward. What if I'm selling my business? Maybe I give some of the stock in that business to a charity before I sell it. Maybe it's real estate. You know, it's an appreciated asset typically that you set up a charitable remainder trust, and you say what's left at the end of the day from this trust goes to the charity. And what's left at the end of the day is similar to gifting the appreciated stock. When you put that real estate or the stock in your closely held business into the charitable trust, you're going to get a tax deduction. Now, it's a little more complicated because that tax deduction is under the IRS calculations limited because you've also decided that you're going to receive an annuity back from that trust. So to the extent you receive that annuity back, that's going to be taxable income. But at the end of the day, what's left goes to the charity, and what's left that goes to the charity you never had to pay the capital gain on. To the extent you get those dollars back from your charitable trust, at least you didn't have to pay the tax 100% in the year of the sale. It's deferred until you get those distributions back. So it's a little bit of a complex arrangement, but it can work well for you and the charity. There are also charitable annuities. You can gift dollars to a charity. There's no trust set up. And the charity without the trust agrees to pay you back an annuity for a period of time. And there's kind of an agreed on rate of return that most charities agree that if they offer charitable annuities, they'll pay back that standard rate. It's similar without some of the complexity of the trust arrangement. So charitable annuities, charitable trusts, very popular. We see it at our law firm a lot of times in conjunction with the sale of a big chunk of real estate or a business. There's a little planning ahead of time. You want to try to get the maximum value for your charitable deduction. You can't wait until you've signed the contract to sell your real estate or your business. There's an assignment of income doctrine that the IRS says that once it's a done deal, you can't just assign the taxable income to a charity. So there's a little planning that goes in. There's a little planning in terms of the valuation of the gift, especially when there's not a pre-existing agreement to sell the company in place. But it's a good vehicle in the right circumstances.
Thank you for knowing all of that.
I was glad he took the question.
No, and I was able to track most of it, really. Thank you, John. Who else has a question? Yes, Sue.
Actually, I just have a comment. We talked about the millennials giving,
And can you talk up, please?
we talk about the millennials and the giving aspect of what millennials look at. I can tell you that as a small business owner 5 years ago, when we started talking about millennials becoming a big part of our workforce, as an industry, we started talking about this, and one of the suggestions was doing the giving where they choose where to give. And I can tell you, it didn't even just help my millennials, it helped my experienced team members say, this is an awesome experience for us. We've seen them donate more money, we've seen them donate more time. We've actually used it as a social media platform to go out and show what we do as a company in the community. And so it's not just the millennials. So as small business owners, because we're talking about big corporations and how they give foundations and that type of thing, our country is based on a lot of small companies. So we have to think about that when we're talking about how we're giving and how foundations look at it. And I can tell you that if we look at some of the different ways of giving, the millennials actually have it right. You're right. It's not a bad thing. And it's been a really good experience for us. So I would just recommend, as you're talking to smaller business owners who don't know how to do this, that's one way to do it. Let your staff tell you, and let the millennials kind of guide you in that. It's been a phenomenal. It's really rewarding for me as a business owner to see what happens in our community. So
Thank you so much for sharing that. pass out some cards, grab coffee with Sue to learn more about this, definitely. Who else has some questions? Anything else you guys would like to add? You're good. Well, as somebody mentioned earlier, it is the end of the year. And you're probably all making some choices, whether it be individually or through your organization on giving. Please, please grab the card of a nonprofit that you maybe aren't familiar with in this room. Grab a cup of coffee or a drink with them. Learn more about what they're doing to see if it might be a fit for you and or might be a fit for your organization, whether it be volunteering, giving, those kinds of things. That's what this is all about. We want to make sure that you guys get connected because chamber members really know how to do business. We know how to do giving. We know how to do community. And so on that note, I want to say thank you again for coming. Thank you so much to Larkin Hoffman. Thank you so much for Katina coming from the Council on Foundations. Cocktails for a cause, y'all. If you are interested in a mocktail or another cocktail, half of those proceeds do go to benefit Bloomington Future Leaders, which we are thrilled about. And after the first of the year, can y'all believe it? Here it is, almost December. We're getting ready for the next conversation with Kim, and this is going to be a doozy. We're going to talk with the group that is doing listening sessions on the 494 corridor. Tim rolls his eyes immediately when I say this. We're going to focus specifically on the Nicollet and 12th and Portland exit ramp and entrance ramp, and should they exist. Okay, bring your thoughts and comments for that. Great. Anything else that y'all all want to add? Anybody? Thank you so much for your support. And thank you, Tim Sass from the city, for doing a fabulous job with our sound system and our audio visual. Thank you. Thank you, Sherry, for being here as well from MRC.